Welcome to Block Bites, the channel for fast, easy-to-understand crypto news. I am Kara, and I am here to break down the biggest stories in crypto so you get the key updates without the noise. Quick reminder, this content is solely for education purposes and should not be treated as financial advice. And if you want the full details, you'll find links to every article in the description. Let's jump into this week's Block Bites.
With a major prediction for crypto from Fidelity Digital Assets. They say, Wall Street integration isn't coming. It's already happening. If they're right, it could change how the world sees digital assets. In 2025, crypto prices stayed mostly flat, but behind the scenes, institutions were building the infrastructure, custody solutions, and regulated products that will support the next phase of crypto. Fidelity calls it the shipping container moment. Just like containers revolutionized trade, standardized crypto systems could make digital assets flow easily through global finance. Wall Street integration isn't just banks buying Bitcoin, it's banks, asset managers, and brokers creating pipelines for traditional money to safely enter crypto. This includes regulated custody platforms, tokenized products, compliance-ready systems, advisors who understand crypto. In short, crypto is moving from the Wild West to Wall Street grade finance. Fidelity expects 2026 to be the year this groundwork pays off. Institutions are preparing allocations, regulators are clarifying rules, and the market is shifting from speculation to infrastructure. Crypto is becoming a core part of global markets, quietly and permanently. For investors, this means more institutional money, clearer regulations, more tokenized assets bridging traditional finance, and crypto liquidity will improve. Volatility may smooth out, and crypto will behave more like other major assets. Of course, it's not all smooth. Challenges remain. Institutions move cautiously, but the direction is clear. More of the world's biggest financial players are entering crypto. While many chase the next bull run, Fidelity focuses on the bigger picture, a world where crypto grows up and becomes a core pillar of finance. The next phase won't be built on hype, it will be built on integration. Next up, we look at Michael Saylor. His company, Strategy, has purchased another $2.13 billion worth of Bitcoin. Yes, billion with a B. Between January 12th and January 19th, Strategy bought over 22,000 Bitcoin, paying an average price just under $96,000 per coin. This single move pushes Strategy's total Bitcoin holdings to more than 709,000 Bitcoin. That makes it one of the largest corporate Bitcoin holders on the planet. So the question is simple. Why is Michael Saylor buying this much Bitcoin right now? To understand this, you need to know Saylor's philosophy. He believes Bitcoin is digital property, not a trade, not a speculation, but the hardest form of money ever created. According to Saylor, holding cash is losing purchasing power every year, while Bitcoin is engineered to do the opposite. That belief hasn't changed, even as markets fluctuate. And here's where it gets interesting. Despite this massive Bitcoin purchase, Bitcoin's price has recently pulled back. At the same time, Strategy's stock has also dipped. In other words, Saylor is buying aggressively, while others hesitate. How did Strategy fund this purchase? Not by selling Bitcoin, not by taking profits, but by issuing new shares and preferred stock, raising capital specifically to buy more Bitcoin. This has been Saylor's playbook for years. Raise capital, convert it into Bitcoin, hold long-term, no hedging, no diversification, just Bitcoin. Supporters say this is conviction at its highest level. Critics say it's extreme concentration risk, and that's exactly why this move matters. When one of the world's largest Bitcoin holders buys over $2 billion worth in a single week, it sends a signal. A signal that long-term players are still accumulating. A signal that short-term price action may not reflect long-term belief. And a signal that institutional confidence in Bitcoin is far from dead. Michael Saylor isn't trying to time the market. He's trying to own as much Bitcoin as possible before the next monetary shift. Whether this move looks brilliant or reckless will only be decided by time. But one thing is certain. Michael Saylor is all in, and he just doubled down again. Lastly, We're breaking down President Donald Trump's big crypto policy push and why he says it's all about beating China in the global digital asset race. At the World Economic Forum in Davos, Switzerland, Trump delivered a major message. He wants the United States to be the world's center of cryptocurrency innovation and leadership, not China. Trump highlighted a law he signed last year called the Genius Act, focused on regulating stablecoins, a type of digital money tied to real-world currencies. He said that law was politically popular, but also strategically important because China is trying to get into crypto too, and the U.S. must not let it dominate the space. He repeated a theme he's made clear before. We have to make it so that China doesn't get the hold of it. Meaning, in crypto, data, and blockchain technology, the U.S. needs to lead, not follow. This marks another step in Trump's broader crypto agenda, which already includes efforts like creating a U.S. strategic Bitcoin reserve and drafting new regulatory rules for digital assets. Now, here are the key takeaways. Simplified. First, this is both a political move and a strategic move. Trump says crypto policy has strong public support, but more importantly, he sees it as a matter of national competition. Second, the goal is clear. Trump wants the United States to be the global leader in cryptocurrency and blockchain innovation, not reacting to other countries, but setting the pace. Third, regulation is no longer being framed as a threat to crypto. Instead, it's being positioned as a way to legitimize the industry, attract investment, and keep innovation on U.S. soil, especially around stablecoins and digital payments. And finally, this isn't just about price charts. It's about who controls the infrastructure, who writes the rules, and who dominates the next generation of financial technology. Taken together, this policy push sends a clear message. Crypto is no longer on the fringe of politics. It's now part of the global economic and technological power race.
That's it for this episode of Block Bites. If this helped you stay up to date, like the video and subscribe for weekly crypto news, clear, fast, and easy to follow. If there's a story you're watching or a topic you want us to cover next, drop it in the comments. And remember, links to the full articles are always in the bio if you want to dig deeper. Thanks for watching, and we'll see you next week on Block Bites.